insurance. It's the other way we can get really, really tricked up and make what should be a wonderful professional experience a very difficult professional experience. So there's two main types of professional liability insurance. One is what's called occurrence coverage, and the other is what's called claims coverage. So imagine that I'm a patient of yours today. God forbid there was a bad outcome, real or perceived that there was a bad outcome, either a true bad outcome, a perception of a bad outcome. I go find my friendly plaintiff's attorney who's advertising on the switchboard 95, have you been injured, call so-and-so. I call so-and-so. Your last day of working in your current job is April 30th, the end of this month. I filed a suit sometime in May after you're gone. If your employer in April provided for you what's called occurrence coverage, that covers you for anything that occurred while you're working for that employer in April, regardless of the lawsuit's filed. Very good coverage to have. Actuarially, it's much more expensive because the employer and the insurer are predicting for your specialty in that geographic area during the statute of limitations, what's the likelihood of a lawsuit being filed. It's a guess. It's an educated guess with actuarial experience. So many employers are saying, as a business, again, whether they're nonprofit or for-profit, large academic medical center or private practice, saying, what's the alternative to the occurrence coverage? So the alternative is what's called claims-based coverage. So same scenario, I'm a patient of yours today, God forbid I'm injured, your last day of work is April 30th, I filed a suit sometime after April 30th if you're going in your new job. Under the claims-made policy, as of April 30th, your last day of work, you or your April employer have to go out and purchase what's called tail coverage. You've all probably heard that term. The tail coverage wants to sweep back in and protect you for something that happened when you were there in April, but this suit was filed after you're gone. Tail insurance is really, really expensive. A primary care physician with no claims, tail insurance can easily cost you $15,000 or $20,000. Is anybody here in anesthesia? I'm not going to call anybody, I promise. I can if you want, if I ask for a check for the payment. So I'm sure I'll call it. How much do you think it would cost for an anesthesia policy with no claims experience? You've been practicing for a couple of years. Anyone take a guess? I don't want to scare anybody. Does anybody drink wine or anything? It might make it easier. It could cost you 6 figures for your policy. Not claims experience. Real money. Most of us aren't sitting with that kind of money in our bank account. You know, if you're an OB, it's going to be expensive. If there's any neurosurgeons, it's going to be expensive. And expensive. If you're doing procedural work, it's more expensive than somebody who's not doing any type of procedural work. You know, an OB, they're on the hook potentially from the birth to the age of majority, which is 18 or 21 in most jurisdictions, plus the statute of limitations. That's why so many academic medical centers have pulled out of the OB business, because the insurance costs are so high. So imagine, I'll just pick a round number. Imagine that your policy is going to cost 50 grand for professional liability insurance. You leave Jay, you want to come work with me as your second employer. You say, Bruce, I'd love to come work with you. Jay was sort of cheap. He gave me a claims-based policy. It's going to cost 50 grand. Now, under state law, virtually every state is required to have professional liability insurance in place. You can't roll the dice and say, my patients are going to love me, they're not going to sue. For public policy reasons, virtually every state is required a certain level of insurance, so God forbid when there is the bad outcome, patients have some accountability there. So your insurance is going to cost 50 grand. I say, don't worry about it, not a big deal. You're the best physician I've ever found. Just tell me where to write the check. I'll write the check and I'll get you a contract, look forward to seeing you. If I say that, let's not negotiate about too many other things. Because I'm giving you a $50,000 present right there, because I don't have to pay for that. What I'm likely going to say, instead of just tell me where to write the check, you're the best physician I've ever found, is, that's a conundrum. Let me introduce you to my local bank. We have a great relationship with them. I'm sure they can give you a low interest loan to pay off the tail policy, because the insurance companies aren't done. They don't want to wait for the hypothetical lawsuit to get filed. They want the payment as of April 30th, your last day of work, and they'll give you some window of time to pay it off. So you could get a $50,000 loan. Or I might say, listen, I was originally going to offer you a 2-year contract. Here's what I'm going to do. I'll offer you a 5-year contract. I'll pay the 50 grand up front. You have to work with me for the next 5 years. If you leave for any reason before the 5 years are up, you will be back to balance. I'm going to amortize it on an annual basis. So after year 1, I'll forgive $10,000. After year 2, I'll forgive $20,000. You're now working for me for 5 years, which may not have been part of your grand plan. Or I might say, listen, I was prepared to offer you a salary of $180,000. I'm a business where, even though I'm a large nonprofit organization, I'm a business too. So instead of offering you a salary of $180 in year 1, I'm going to offer you a salary of $130 in year 1. And then in year 2, I'll bump you back up to $180 because that first year you need to pay your 50 grand tail policy price. So innocuous language in your employment contract. Employer shall pay for employee's professional liability insurance, period. Don't check it out and say, I'm great, I'm in good shape, I don't have to worry about it. You need to think about, is it an occurrence policy? If it switches from an occurrence to a claims policy at some point, who pays for the tail and under what circumstances? I don't see any of you stuck in what I'll call a golden handcuff situation, where you can't afford to leave job number one to go to job number two, because you can't afford to pay for that tail, and no subsequent employer is going to pay that tail for you. And this is going to follow you throughout your entire career. This is not just your first job. If any of you are moonlighting elsewhere and you're keeping the money for that extra moonlighting you're doing, check the policy, because if I'm your main employer, I don't want to pay you to go to work a hospital shift someplace else or go work in an urgent care center and you keep the $1,500 they pay and I don't get any of that money. So understand the ramifications of professional liability insurance. It's an expensive way to get tripped up.